Welcome again. Good afternoon, good morning, good evening, wherever you find yourself. This is Walee, your boy, your host. And today we are focusing our attention in different sections. And also, first, what we'll do is we will just go straight to this week in crypto. What really happened in cryptocurrency this week? I think we had a lot of news from Monday to from even to yesterday. So first, what we will do is we'll go through that, and after that, we will shift our attention into different issues, which basically is about the scams in cryptocurrencies. Today, we want to focus our attention into it and just discuss a bit more into that. And today, we are joined by our own special guest who is very experienced in this crypto industry, Mr. Tevia, Frank Tevia, who is also here with us. So first, Mr. Tevia, you're welcome.
Thank you very much, Wally. It's a pleasure again to join you this week to further our knowledge in this space, which is actually now moving away from being a fringe, technology to a mainstream technology. So thank you very much, for inviting me again.
Thank you very much. So first, what we will do is we will look at what happened from Monday to Friday this week in crypto. Can you just brief us about what happened, and also let's go through a bit of discussion. What's going on? I also have some questions about that.
Okay, first off, I will start with the news of the base network that had some issues. Uh, Base network basically is a layer two protocol of Ethereum.
Mm,
And when we say a layer two, what that means is that Ethereum, as we know, is the mainnet. Blockchains are primarily, the basic infrastructure, the base layer that you can build other applications or other protocols on top of it. Just like we had the internet, the basic internet, which links the all the computers in the world together, that being the base layer. And then on top of the internet, you can build different applications on them. We can build a banking app. We can build different websites on that layer. What happens is that the base network was compromised. I think $3 million of assets were actually siphoned away, and it gives us the chance to be able to talk about or to kind of deepen our knowledge as to what different aspects of blockchain represents. Okay, so the base network is a layer two network on top of Ethereum, which, as we all know, is the second most popular blockchain next to Bitcoin. Um, what happens is that most blockchains, as we know, even though they offer a lot of security, transparency, peer-to-peer transactions, uh, and all that, but they tend to be very slow in terms of the rate of transaction.
mm,
So a typical Bitcoin would have um, not around, but let's say 10 transactions now per second.
mm,
Um, and if you compare that, if you want to use that, as a payment scheme, that becomes a problem because then it's trying to compete with other sources of fund, transfer and payment systems like let's say the Visa network, which does, you know, a tremendous amount of, volume. Okay. So uh, the layer twos on top of Ethereum or let's say Bitcoin tend to offer a lot more efficiency, not efficiency, a lot more speed in terms of transaction.
okay.
It helps you to be able to the throughput of transactions to be able to
Mm,
increase on the order of let's say 100x or more, uh,
mm,
which then makes it more kind of amenable to being used as a payment kind of infrastructure.
mm,
So the base network is a layer two network on top of Ethereum. It is not the only layer two on top of Ethereum. There are others. Okay,
mhm,
and but what happens is that when you try to speed up, the transaction, you offer a bit of a loss in security because the reason why, the most layer twos tend to sit on top of Ethereum or let's say Bitcoin is that these protocols, these networks are very secured. You know, Ethereum is the main network for smart contracts, and
Yeah.
it's very, very secure. It hardly ever goes down. You cannot really hack, a layer one, a layer one blockchain. You can do that,
Mm.
Uh, layer twos, okay, tend to sort of sacrifice a bit of security
Okay.
for higher throughputs. Okay.
Okay.
And
Okay.
yeah. So instead of you going through a layer one whereby transactions are actually bulk together, Bitcoin will do that every 10 minutes, it bulks, transactions together, and then we'll actually write that to the block. Okay. And that,
Okay.
ensures that settlement and funds are actually transferred. But in terms of layer two, they will actually bulk the different transactions together, okay, into one block.
Mm.
So not every transaction is actually included, in a block. They will bunch a whole lot of
Everything
them into
together.
one, yeah, and then include that in one block. That way, they're able to first decrease transaction cost because the layer ones, what happens is that during peak hours, okay, that people are really sending a lot of
Lots
transactions
of
on the
transactions.
blockchain. The transaction cost tends to go a bit, it tends to go up. And that tends to defeat, the purpose of blockchains because
Mm.
blockchains are supposed to give us that kind of a savings or a bit of a lot of a discount in transaction fees. And then when you get to these peak hours, the transaction cost tends to go up. And transaction cost, as you know, is a function of the amount of transaction that is going through because the miners who actually keep these the blockchains, the ones who actually mint these things and make sure that transactions actually go through, they are compensated, and they get a transaction fee. So when there's a lot of transactions going through, then it becomes a problem for in terms of transaction fees. So
Mm.
the layer twos tend to help that. So you sacrifice a bit of security, okay, for higher, for speed and also lower transaction cost. So
Okay.
this week, the base, yeah, we had a problem with the base network.
Wow. So,
Okay.
so okay, I think before you move on, you see, these are some of the issues that we will look at in our subsequent section. So, and it's something for me. It has been because people are afraid of entering into cryptocurrencies, right? The market of cryptocurrency because of these kind of issues. That mostly happens, right? So, let's say for the base two, as you were saying, how should some maybe some let's say some of us, let's say our colleagues, how should they protect themselves from some of these threats?
Okay, so basically the layer twos, it is not you that is losing the funds because the thing is that uh, what you have to ensure is that your private keys, which you use to sign transactions, is just like having a password on your email. Okay, you have to make sure that that is not compromised. All right, because if you're going through a centralized exchange, okay, most of the time, like a Binance or a Coinbase or
Companies
any of those known
on chain,
centralized
yeah,
exchanges, okay,
yeah,
those ones will protect you because the thing is that your private keys even sort of reside with them. And
yeah.
then when there are any losses, there are protections, in place. I think we discussed that last
Mm,
week.
yeah,
Okay. Yeah. So the most important thing on your part, and I know that in the second part we will discuss, a lot
yeah.
about that. Okay.
Mm,
Is so when base network had that issue, okay, and those basically it's base network, the company that will suffer, and
mm,
not the individual this thing
okay.
members or the use of the network.
Yeah. The
Okay,
clients, okay,
so
okay,
there are another clients now that will suffer. Yes.
okay.
So you, the client, as far as you're concerned, and I think we'll discuss that later,
Mm,
making sure that you can really protect yourself.
Yeah.
You're quite wary of, the things that you do to make sure that you don't fall into the hands of scammers.
Okay, so let's move on to another issue that happened this week. So I think Bitcoin rose from, I think it was hovering around 117, 118, and I think a day we just saw 117 up to 122, or was even above 122K. So
Right.
what was happening? Like, was it only the institutions which are buying Bitcoin, or the let's say the retail customers are also buying it? What is happening in that space as well?
Okay. I think as far as uh, Bitcoins are okay. Bitcoin is an asset. Okay.
Hmm.
Now we have what is called the crypto assets. Okay.
Hmm.
It's an alternative assets when it comes to the general, investments kind of arena. Okay. And so it will tend to behave, okay, in a way that is similar to other financial assets, meaning that it's got demand and it's got supply. The
Supply.
good thing about Bitcoin is that the supply of Bitcoin Bitcoin is price inelastic, meaning
Mm-hmm.
that um, the supply of Bitcoin is inelastic. There will ever be 20 million Bitcoins in the whole world.
Hmm.
Now, about 80% has already been minted. Okay. So any news that tends to, or that tends to give investors, okay,
Hope.
some kind of a hope,
Yeah.
okay, would tend to sort of push the price up a bit.
Mm.
So now the basic thing that tends to drive, Bitcoin would be regulation. Okay.
Mm. Okay.
So regulation in the sense that as far as retail customers are concerned, I think most people, even without regulation, we're investing in Bitcoin. Okay.
Hmm. Hmm.
What is actually happening now to make Bitcoin more appealing to institutions, okay, would be the way that regulators, tend to view this asset or the kind of legislation that they pass. Or at times, it's not even the legislation alone, it's their pronouncement, okay, or the way that, they tend to lean, if people for institutions feel that, oh, now Bitcoin or let's say the regulators are becoming more acceptable,
Yeah.
or they see
Accepting.
that, yes, there is a way of them kind of trying to include it in the mainstream investments.
Mm.
That is a positive look. I think last week we spoke about President Trump,
Yeah.
signing an executive order, okay, to allow
Oh,
401ks,
okay.
okay, to include crypto.
Yeah.
I believe that is the reason why this thing is going up. I just didn't want to mention that. But what happens is that we know that 401ks are pension funds in the
Hmm.
US, okay? And these instruments in the past, you know, kind of shied away from what we call alternate investments. And they were basically meant for uh, mainstream, investment, products like stocks, bonds, mutual funds, and all that, okay, that are really known and tested or are being regulated by the Securities and Exchange Commission, all right? So when President Trump signed that, okay, and says now you can include, can you imagine? It means that every person in the US that
US.
invests 401k, can I
Hmm.
include that? Before
Yeah.
it was excluded. So what do you
That's
have? You
true.
have a lot of demand,
That's
okay,
true.
against an instrument whose supply is determined by the laws of mathematics. It means that there will ever be now so much Bitcoins every time it is released.
Mm.
So demand increases and supply is constrained or remains the same,
Mm.
definitely the price will go up.
Oh,
And
wow.
yeah, okay. I think way back in 2017 and 2018, when I started, researching about, cryptos and Bitcoin and all that, even back then, that was the basic kind of view that the crypto enthusiast or the crypto savvy people had. We know, and I mean, if you research these instruments, you know that definitely there'll be a time where they are going to determine. the nature of money, how money is actually sort of like viewed or how value is actually transferred from person to person. I was convinced, and that's why I've been
Mm.
in this area. If somebody that is not convinced, that's fine. Okay, but I was convinced. But we kept saying, and I believe that most of the presentations that I gave to different groups in 2018, in January at CTFM, NIA, whatever, I kept saying that the only thing that will affect, the price of Bitcoin, at the time it was about $8,000,
Yeah.
was regulation. Okay.
Mm.
Yes. Because the only thing that will affect it or would sort of like uh, cast a negative slur, okay, on Bitcoin, in which case it might actually die off or still stay a French investment, would be regulation.
Mm. Mm.
And so as we see regulation sort of like being sort of like amenable, to the existence of these instruments, the crypto assets. And then, so we begin to see that the value tends to keep going up and up and up, the way that we are seeing it in recent times.
Yeah, yeah. And for me, I mostly so I also do follow stocks a lot. So in the stock market, what mostly we see is okay, the prices are moved by news, as we just said. Okay. But the price of a stock would move that is immediately as let's say they get a positive news or even a negative news. So if let's say a stock receives, let's say gets a good news, you see that the stock will be rising because investors see that okay, they start to trade it very well, and you see that the prices will be going up. And if we get, let's say, a bad news, you see that the prices will be coming down. So I was thinking that, okay, so if Bitcoin or even in the crypto world, if or either Ethereum, whatever, if they, let's say, they receive a good news for, let's say, today, or even today, it's, let's say, 1:58 p.m. The same time, that is when Bitcoin should be rising, not, let's say, 1 week later or 2 days later before, like it's so I was a bit I wanted to understand that section. Is it different from how news right maybe helps in, let's say, stock rising up? Is it different from Bitcoin? Because I was a bit confused about it because I knew that yes, President Trump has signed that executive order, but it wasn't the same day that the Bitcoin also rose up to from 117, 118 to up to like even 122, about 122, 122K. Yeah. So is it do we have any difference between them, or they are all the same, but sometimes maybe the time differs?
Um, okay, so you know, just reacting to your observation,
Mm-hmm.
um, when it comes to, financial, assets, like the uh, let's say legacy or traditional financial assets, as
Yeah.
you're talking about, okay. These things, you know, uh, tend to sort of like, okay, they flourish on the market. And then remember that even if when you say the stock gets good news, most of the time, okay, what happens? And I just wanted to give a different perspective. In finance, um, uh, most savvy investors, okay, would uh, bid the price of a stock higher than in anticipation of the good news.
Mm-hmm.
Okay. By the time the news comes out, all right, it's already factored into the price.
Yeah.
Because what happens is that you've got analysts, every major stock, if you take Apple,
Tesla.
Microsoft,
Yeah.
Nvidia, whatever it is,
Mm-hmm.
they've got analysts that are following them.
Mm.
Okay. So the big investment banks, okay, have got analysts that are dedicated to individual stocks. So what they do is that through what is called fundamental analysis, all right, they will look at all available information and then even project if the company, and then they talk to the insiders as well. They'll talk to management, they'll talk to the research department, they'll talk to industry specialists, and then find out if, oh, Nvidia is going to bring out something the next 1 year, and when it comes in the next 1 year, what effect is going to have? So what it is that they tend to uh, sort of like move ahead of the price. But
Mm,
if you wait, as you just said, for the news to hit, you might not get to buy because what happens is that all of a sudden supply is going to increase. Sorry, demand is going to increase while supply stays the same. So the price is going to go just keep going up. All right. So the price that you would buy at will be very, very high. Just like we are in Ghana. Okay. In Ghana over here, if you something happens to the US, like Ghana cedi versus the US dollar, okay, and you want to buy, there's something called liquidity, and I will address it in the next session. Liquidity, is how quickly, you can turn something into
close.
cash or how available that particular asset is. Even with stocks, okay, every company has got a set number of stocks that they are selling.
Yeah.
Okay. The stocks, you cannot expand the number of stocks that you're getting instantly because more people want it.
Mm,
Okay. So if everyone is going to wait till the news comes out, by that time, you wouldn't even get it. Even if you want to buy, there's no liquidity and the stock will keep
mm,
going up.
yeah.
Okay. Yeah.
Miss out.
In the case of Bitcoin, it's almost the same way. You know,
Mm,
you want the thing to buy, but it's only going to be possible if people are ready to sell to you.
mhm,
And if good news comes out and you are less than a holder of Bitcoin, why would you want to sell now? You want to hold on to it, okay, for the price to go up so you can benefit from that. So at the time that the good news comes out, even those who are holding it, unless they have like a need, an immediate need for cash, won't even
mm,
sell it. They will wait for the price to appreciate and then at some point to liquidate it.
mhm,
Okay. So yes, investment, like I said, in- uh, investment assets tend to behave the same way.
mm,
Bitcoin is different in the sense that you cannot, unlike let's say companies or Apple, that
yeah.
can they can go to the board, okay, and through a board resolution decide to increase the number of shares. Okay, it's allowable. They can increase the number of shares. Okay, and float more shares. They can do what is called stock splits. Split,
Yeah.
the price of the stocks. There are things that they can do. Okay, to really sort of like help the sale or the transaction in that particular security. All right. With the case of Bitcoin, you can't do that
Okay.
because it is set. The laws of mathematics control it.
Oh,
So even if, let's say, the whole world wants to buy it, it won't be available. But the point is that Bitcoin, unlike these stocks,
I was going to go to
can
the
be
study abroad thing,
is
but now I'm taking the study abroad thing back to on. Yeah.
is divisible into 10 raised to the power 8. Okay, it is
Okay.
divisible into 100 million parts. That
Oh,
is why, yes. So if you have, let's say, a currency, a dollar is divisible into what? 100 parts. The
100.
lowest is what? 1 cent. The city,
Yeah.
same way. Okay. And if you take a stock, stocks are not divisible.
Mm,
Okay. A stock is the stock. Okay. Unless, they try to sort of like do a stock split or whatever. But Bitcoin, every Bitcoin can be divided into 100 million parts.
mhm.
And that's called a Satoshi. So every crypto, that is what makes it so affordable. So you can even buy if you have $2, $10, you can even buy, some Bitcoin.
Mm,
Okay. So this is what it is. So you might have one Bitcoin and all of a sudden the price goes to, let's say, $200,000. It's like, okay, let me liquidate. Let me sell just 0.002 of
yeah.
a Bitcoin and give me
Yeah.
10,000 cities. Okay. You can't do that with a stock.
That's true.
Okay.
That's a
Yeah.
good point. Yeah. Yeah.
Yeah.
Okay.